Hello folks, I'm L.A. Little and this is your daily NeoTA wrap. We take a look at these markets and we do it from a neoclassical perspective. Each time we ask ourselves, what happened today and what does it tell us about the coming ones? I do this show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time on YouTube. It's under the channel L.A. Little. You can subscribe to it. You'll get notifications. If you take the defaults, I believe you get notification each time a program is posted, which is kind of like a nice convenient factor. And you can watch it anywhere, anytime, any device. So that's a good thing. As far as these markets, as far as what happened today, it was another day of, shall we say, pain. They opened it down pretty big this morning and then found their way higher before the end of the day in most of the indexes, not all of them. So we opened up, what was it, down 24 on the Dow, down 20 on the NDX. And remember last night we had some pretty bad reports. Netflix, eBay really took a hit. Netflix was down like $120 or something, some huge amount. 25% at one point, 24% this morning when I looked at it. But those put pressure on the NASDAQ. Of course, when Netflix did that, that put pressure on all of the net stocks. Google reported after the bell this evening, and it didn't do anything to change that. It wasn't nearly as bad, but didn't do anything to change it, really. Google will be a big tell tomorrow to see how it trades. But as far as the NASDAQ, the NDX, tough day, but you're seeing the broader composite, as we've talked about before, as one of our tells is with the Russell and the broader composite trade higher on a relative basis. And certainly the Russell has been doing that. The broader composite, more or less doing that. We had a little bit of pressure to start the day, as I was saying, and then the markets kind of turned around. All of the things, if you remember yesterday at the top of the show, I said all the things that were going up are now going to start flipping around and trying to go the other way. That's what bonds did. That's what silver did. That's what gold, well, gold tried to, actually held up pretty well. But all your bonds, your silver, all those things, all the commodities start to flip around. With the exception of the one that's kind of not, paying attention to anybody anyway, is oil. This was an interesting story, and if we have a little time, we'll get into it. They came out with the inventory numbers on the oil market, and oil went up. So, and those numbers were huge, huge supplies, more so than expected. But it didn't go down, and a lot of times, how news is received tells you a lot about the psychology of what's happening in that market right now. So that's kind of the ending numbers. Let's pop into the charts, and I don't want to look at the weekly. Let's pop over to the daily on the S&P to start with. So towards the end of the show here, I'm going to do the summary first, but towards the end of the show, I'm going to go a little bit deeper in how we got to where we are and probably where we're going. So if you want to stick around for that, that'd be cool. As far as what did happen today, as I said, we had some pressure this morning. They sold it down. S&P tried to get back down towards the low. Pre-market, we actually had new lows on the NDX. The S&P came within a couple of points of the lows pre-market, but during the regular hours, they didn't get that low. And they tried to do an inside day, and then we got this big news out of Bullard, Fed official, I think out of Georgia, if I remember right, came out and said that, and he's been one of the hawks. He came out and said something to the effect that they may have to not end QE as scheduled here in October, and the market just took off, and S&Ps went up something like 0.8% or so, and then eventually made these highs and then sold back off and finished almost even on the day. you can see that this market wants the Fed to step in, just like when we had that what temper tantrum that took place, you know, like was it a year and a half ago in July, a year and a three-quarter or a quarter. You know, they came out, they said they were probably going to start, you know, winding down the QE program, and the market just, you know, barfed all over the place. And then they came out and started talking about, oh, well, maybe we have to, you know, go slower, and you misunderstood us and all that stuff, right? Well, the same thing's happening now, right? We're getting close to the end of QE. It looks like it really is going to end, and those interest rates are going to, you know, come out. And now the market doing the same thing again. Now, you know, maybe that's what's happening, or maybe, you know, the market is sensing weakness in the economies. You got weakness in Europe. You got China weakness, although China is always, you know, stimulating, taking off, stimulating, and so forth. But, you know, maybe the market's feeling that weakness coming. You know, I don't know which it is, really. You know, the market does a much better job of pricing that stuff in than you or I can in terms of trying to figure it out. So we just watch what the market does and just take it as the clue. But today, inside day on some of the indexes, on the S&P, it actually got over the high, back underneath it. So it tested into two highs here. Let's draw this out. Now, it's not the end of the world, but it's not what you want to see. So you get over this high, and you get into this bar. Now, the bar it got into, it actually had more volume, but it didn't have as much volume as yesterday. So you got two or three things at work here. One, this is a test failure. Now, because the volumes aren't too badly distributed, and because of other circumstances that we'll talk about, it probably is going to try to test it again, and then if it fails again, then it's probably more meaningful. The other thing that's happening here is you got volume now at the bottoms. That usually says they're going to get retested. Now, it doesn't have to happen immediately, just like it didn't happen today. As a matter of fact, there's nothing to stop this thing from rising first and then coming back down. So, you know, you could get this bounce and then reversal. And there's, you know, in this market, there's nothing to stop it from just keep going. I mean, I've seen that before too, and you have too. I think this is a long shot right now, extremely long shot. The more likely case is some sort of a bounce and then a reversal test. And then that's where you find out, you know, does this market really want to go down or not, you know, in terms of more. And we'll talk about that a little bit later. But anyway, test failure here on this time frame. And if we look at the, let me get the right chart here. If we look at the other indexes real quickly, Dow Jones. So the Dow Jones comes in inside day, so that one doesn't really tell us anything other than the fact that we got a high volume low out there. The NASDAQ composite we were talking about. Now this also does a test failure, although the second to the previous bar, right, that low there, 42.1287, we close at 42.17. So you're closing inside that bar, and I was saying extenuating circumstances, this is one of them. So the NASDAQ composite, the broader composite, test back in, closes over yesterday's close, but under the high, which is a test failure because it has more volume. But it also closes back into this bar that it's trying to get back into, these large, you know, the big, you know, this, you have to think about, you know, the importance of the bars. These bars were the breakdown bars. This one in particular, you know, and that was the carry through. So now you test back into it and you stay in it. That's a good sign. Now it's got to continue, but it's a start, right? And when you're getting this kind of a sell-off, you're just looking for some sort of a start. NDX, this one's an inside day, didn't really tell us anything, less volume, you got a high volume low. The Russell powers higher again. There's actually a question, might as well just tackle it while we're here. There's a question about, okay, so this thing broke. Well, let's finish the thought here. So you got a high volume low, that's one thing to note. Now you got a pretty good spike up on decent volume. You're coming back up towards the retest regenerate zone on this time frame. Okay, so that was way back up here. So that's a ways to go. So that's the first thing. Second thing, which is what the viewer question was about, has to do with the break of multiple swing point lows and the fact that this thing has reversed and came right back into them. Okay, so the question here is, okay, so, usually when you break multiple swing point lows, you get 2 to 3 bars extension. You either go sideways or down, but you don't usually go back up immediately. Now, that's not true of just a swing point low break, but it's definitely true when you get multiples on multiple time frames. And so, again, the probabilities are high for that to continue. And there were multiples. There was one here the prior week. That was this transition. And then this big bar down last week broke all these other ones, right? Broke 4 of them, in fact. And so that push down breaks them, right? Volume didn't escalate that big on that push down, but it did get under them. Now you get a big, huge bar taking place this week, leaving a high volume low. That's another thing to realize, and it's bouncing right back up into these swing point lows. Why is it doing it? That was the question, right? Because it's supposed to keep going down. Well, yeah, but consider where it came from, right? You always have to factor in, these extenuating circumstances. It should have done an ABCD down to here and finished and held, and it did. That was this bar. But then it turned around and broke them all. In other words, it overextended, and now you're getting a violent bounce back up. Time has a lot to do with what takes place. If you get a huge extension like this and it just continues, then you have to expect that it's going to have a hard time fulfilling that probability because it's already overextended. Now the probability says 2 things. 1, 2 to 3 bars on the longest time frame, which is the weekly. But it also says it doesn't have to go lower, it can go sideways because we're talking about a weekly chart. What's the retest regen? It's the lowest low, it's high. And so because you're coming back within 6 bars, you can come all the way back up there. Sideways would be what? Anything from here down. So it's still doing what it should be doing, and I'd be very surprised if it gets up here and actually breaks back out, but that's a different story. So that kind of answers that question. Looking at the indexes, the sectors, and I'll go into those in a little bit more, and looking at the world markets, the sectors, you're getting some of those start to turn. You got some 2-bar reversals in a couple of them. You've got a number of things here augmenting the fact that the indexes are trying to turn. And if you go over to the Ox market, you've also got some signs there where the bonds are coming off. Junk bonds did a 2-bar reversal. So there's signs over there that also suggest that this market's going to try to carry through to the upside. So I'd be surprised if we don't see some more testing to the upside tomorrow and potentially that fabled bounce coming through. So that's kind of your summary. Now let's look through some more of the detail for those of you who want to stick around. So let's pop into the major sectors, and I'll show you what I'm talking about here. So you got a couple of these doing 2-bar reversals. You had a 2-bar reversal on the SOX, right? It was over 3 bars actually, but it was a reversal. You tested lower, it couldn't go lower. Technically, it's not what I call a 2-bar reversal, but it is a test failure to go lower, and you're getting a weak bounce off of it. That bounce looks like it can continue some more. IBB actually did a 2-bar reversal yesterday and got the follow-through big volume today. Spikes up into that swing point low, has a lot more volume. I would expect it tested again tomorrow and test this 2 breakdown bars here again tomorrow as well. And these will be the key ones, this bar and this bar. So that's what's happening on the IBB. That also looks like it wants to try to go higher. IYT gets a nice big spike up. Now the IYT left volume at the lows, but it gets a nice big spike up on volume, testing back into a swing point low, gets over it, stays within it though. This will be a key test. What you want to look at as this market bounces is how does it do these tests? What do they do? Do they fail or do they succeed? And succeed in this case is it's bearish. That would mean that you come up, you can't get over it, you come back down. You regenerate lower, right? If it starts to do this on these sectors, that suggests the indexes are probably going to do the same thing. So that's what you're watching for, what you're looking at. XLE is actually an interesting case. Remember, we've been talking about it quite a bit because it's kind of a textbook case right now where you're getting these huge volume spikes on the way down. You just left volume at the lows, and I said with oil got bad inventory numbers yet went up. That tells you it's washed out. If you can't go down on bad news, you've already gone down on the bad news. You're done. You're going to get a reversal here. You're going to get a spike back up. This thing is so oversold. It can get one heck of a bounce and still not mean anything. And what I mean by that, if I go back over here and look at the weekly, it's going to hold these swing point lows, it looks like this time. But to go back up and just retest, regen off the prior one, that can get you back up to, what, 88 almost? 87, 84? That's another $5-6. That's how crazy this sell-off was. So this can give you a pretty big bounce and still be ready to go down, and we'll probably come right back down again. That's probably going to try to go higher. XLF, XLI. XLI actually had some good volume on the way up. Here's what that one looks like. XLK. So that, those kind of spikes, when you see that, that's probably short covering, but it can carry. XLY really didn't do anything. XLV still inside day, high volume. So that's pretty much those. Over in the ox markets, though, there's a couple signals there I mentioned. Let me show you the charts real quick. One of them actually I didn't mention is the emerging markets. This is a 2-bar reversal on those. So I suspect Asia is going to trade higher tonight as a result. And the same thing in Brazil and in some of the other countries. You're also seeing the dollar flatten out. And so the dollar, is not going to plummet back down, it doesn't look like, which is probably going to put some pressure on gold, on silver, some of those. But the ones I mentioned earlier that look like signals for the equity markets is junk bonds. The junk bond gets, I thought I had a 2-bar reversal here. I must have been looking, maybe I was looking at the weekly. When I was looking at this, oh yeah, it's the weekly I was looking at. So the weekly looks like it's going to get a 2-bar reversal. And so that would suggest the junk bonds are going to try to push back up a little bit. So that's also something that looks to me like it's telling us that this market is going to find a little support here and try to bounce. And then the other thing that's happening is that big blow off top yesterday is seeing more selling in the TLT. I suspect that TLT is going to make it all the way back to the swing point high before it's done. And then, as I told you, on oil made a new low, left volume down there, but refused to stay down. So all of those things, when you put them all together, now the world markets are a different story. And quickly just show you a couple of them. The thing here is that they're not telling you any kind of reversals in play. What they are telling you, though, is that they're totally washed out, just like we are, and more so than we are. Here's a big spike down on the CACs yesterday, left volume at the bottom, reversal, hammer reversal. Yeah, they can trade back down some tonight, but it looks like that's going to stick for a while and they'll get a bounce. The German DAX actually looks even better, hammer reversal back in there, but it's a high volume, so it has a high volume low now. Same thing on the FTSE. So when I look at Europe, Europe just looks like it's ready to try and bounce after being totally annihilated. The other one that's probably going to start bouncing pretty soon is the Topics, Japan. That one tested the lows. It will probably test them again today. But I suspect for now it's going to hold, given, just like we were talking about earlier, given the extension. This thing is totally overextended. Right now, you've got extreme moves, right? This is like, extreme makeover or something, right? That was the extent of where it should have gone, into here. Well, it doesn't want to stop there. It goes that much more. Does a high volume low. Yeah, it's going to come lower again, but in the meantime, this thing's going to try to bounce. So maybe, especially if you get a test tonight that won't go down, that will get you in a bounce. So that's kind of what the markets look like. I had a question about a particular stock, so let's take a look at that. Let me get the question here, and then after that I'll quickly go over what I still wanted to do. KMI. This is Kinder, I think it's Kinder Morgan. Let's see. Yeah, Kinder Morgan Inc. Okay, so wants to do a short-term trade. I assume you mean long. Let me see what the weekly looks like just to see if there's anything there. Oh, I didn't put it on here. Let's do it here. KMI. Yeah, these guys I saw did earnings today, I believe, or yesterday actually, because I saw them in my list of a post-earnings trade. You know, I look over all the earnings every day. So they actually, I believe it was today I saw them, so they must have reported here yesterday, maybe after the bell. This is going to trade back into this bar. The problem you face on this trade is that, you know, this is going to be resistance, and you know, it's going to be hard to get back into it. So, and you're so close to it already that what I would do is I'd make it trade into it first, get over the breakdown bar, and hold that area before I bought it. I wouldn't buy it on the big spike, right? That's a 10% move here. You know, I didn't look at this, but this is, what was it up today? 4.34, 2.29. Yeah, so it's up like 7%. So that's hard to buy. I would force it to come up here and tell me it's going to try to get back in this higher range, because you have two ranges here now, right? You've got this range up here, and you got the range up underneath it, right? Always about equidistant is what you want to see, and you know it's coming right up here to test it. You want it up there. So you want to make it get up there and stay in that range. If it can get over this low, preferably test the top of this bar and test it with more volume, just like it's doing right now. And then, you know, buy it right in there somewhere. And then you don't have to risk much. And then you're shooting for the top. Okay, so that's the way I try to trade that. Let me pop over now with what minutes I have left. And I want to kind of review how we got to where we are, maybe where we're going to go. So let me pull up the S&P. Actually, let me pull up the Russell. And I just, you know, for those of you that don't watch every night or haven't been watching or new, you know, I'd been talking about the Russell being our best indicator for a long time. And for those of you who've been watching, you knew that I was getting careful, you know, 2, 3, 4 weeks ago, about 3 weeks ago. And for members, they definitely know that, and I believe I try to express, you know, my general thoughts here for the benefit of all. And what I was telling you on the Russell, this is the daily chart. What I was telling you on the Russell was that, you know, when we got this bounce, well, two things had already happened. How we got to where we are. We had a high. Russell's been the dog all year long. It tests the high, tested on lighter volume, right, and fails. That's a bad sign. Then it comes down, then it bounces, and then it starts to roll over. Okay, that was when, you know, about on this bar, I started getting very careful. And as a matter of fact, I think it was the beginning of this week right here that I had members and we started pulling out of all of our trades. You know, all of our short-term stuff. And the reason for that is this thing has been consolidating for a year at these highs. And it has been unable, you know, to get over and continue on, even though the rest of the market was doing so. Now, it wasn't just this. It was a number of other things that I've pointed out in articles. And if you follow any of my articles, they're on the front page or on MarketWatch as well, usually the same articles I reprint. Those articles were talking about a number of different things. Like there was one called the Shades of 2007, which was talking about, you know, the number of down stocks compared to up stocks and how it looked like 2007. And the way the Russell was acting looked at just like 2007. In terms of a divergence and the failure to reach a new high when the S&P did. And so all of those things cumulatively, and then as the Russell started to roll over, it was a big warning sign The other big warning sign, of course, was the fact that these swing point lows were sitting down here, and if you break them, it usually causes fast moves to the downside. And it did. I mean, this thing went from 1190 almost to what, 1030, 1040 or something? I mean, that's a pretty big move. That's not a small move. I mean, any more of these things look small on the charts, but this was from 1142 roughly down to 1040. So you lost 100 points. You lost 10% in 3 weeks, 4 weeks. Well, basically 3. That kind of move comes, those kind of fast moves come off of breaks of multiple swing points on multiple time frames. And so when you see that setting up, you know you have to get careful. And you also know that if it happens here, it's probably going to cause that to happen elsewhere, because all of these indexes eventually do go together. You know, they may not go together initially, but eventually they will. And that's exactly what you've seen. You've seen the S&P come off. S&P is traded down, you know, what is that, 8-9% now? And it did it all, for the most part, along with the Russell. These 4 bars. So you were basically at highs. You were, one of the articles I wrote, you were at when I called for the shades of 2007, we were 1% off the highs in the S&P. When I started warning, that was the first week I started warning again that things were getting very dangerous. And we were at 1% at the highs, you know, 1% off the highs. And now we're, you know, 8-9%, and we've been as low as almost 10. That's how we got here. Now the question is, where are we going to go, right? Unless we get one miracle rally tomorrow, we're going to break this swing point low. Now the good thing about that is something we've talked about endlessly, is that these numbers make no sense anymore. Bullish, you know, 91, bullish 97. They're absolutely off the charts, right, so to speak. And when you have that situation, and you get a reset, then it starts anew. It starts fresh, right? You get that renewal effect. In other words, you wash out a bunch of weaker holders, and if the economy still is good, and if things still are okay, then this market can regenerate higher. Now, how does it do that? Well, the first thing it has to do when it finally does it is it finally has to start breaking retest regenerates now that are bearish. And they usually line up exactly like this one does, and that is that all the pressure points end up right where the swing point low is. Why do I put so much emphasis on swing point lows as tails? Because they almost always end up being where you care. And that's where this one is. That's going to be the key spot. Can you get over it? And can you stay over it? And it's not just the bottom of it. It's going to be, can you get over the top? Because the top is where the tail is. And in this particular case, it's 1943 roughly. So you have to get back over that to turn this picture around. The second part of this is you have the potential to go the other way. And if I bring over the monthly chart, and as I just showed you, we're ridiculously overbought here as well, these don't change very often. Matter of fact, they almost never change. I mean, you'll get reaffirmations, right, like we've seen on the way up, but you don't get trend transitions. Trend transitions can be deadly. They don't happen often, and when they do, usually, not always, but usually, it actually is a trend transition that's going to continue. In other words, if you go to sideways, you may go to bearish. You know, there's decent probability you go to bearish. Not written in stone, but, you know, that's typically what happens. In this particular case, in other words, you usually go for a long period of time and then you do a big correction. It really is a bear market for a while. You wash out and then you start again. The swing point low on this is 1738. If you cross that, then the danger zones are extremely high, because at that point you're going to have bearish on both your, you know, intermediate term and more than likely on your short term. And now you've transitioned to sideways. you're in your worst position in terms of potential breakdown. So a big number is going to be this if we regenerate lower. Now this number, 1738, keep that number in mind. If we come back and hypothesize what can happen, and let's give this the benefit of the doubt and say, oh man, this is going to be a strong bounce and it's going to make it all the way back into a full retest. If it does and it comes back down, right, you can expect about that much. And where does it take you to? Swing point low. That's the danger, right? That's this low. That's the setup. That low is the monthly, right? And if we get down there and break it, and in this particular case, what would happen is you'd get down here and you'd hold probably, and you'd bounce again. You got another swing point low here that would become your retest regen zone. And maybe you get real strong, you break it again, and then you try to do it again. So you can see this is how the progression works. It's this bounce that's always critical on a big turn. It's not the first move down. You certainly want to not be part of that first move down, right? You want to know up here somewhere that it's likely, which in this case we were very fortunate to know that early on. But you definitely want to watch this one, because that's the one that can kill you. These can lead to 30, 40, 50% declines. Those are the danger spots, right? And that's where one has to be aware of what can happen. Doesn't mean it will. It's just the setup, right? But you have to be careful. That's going to be the key test, folks. Thanks, as always, for joining me. Thanks for telling friends. I get feedback nowadays from folks. Seems like this format's working pretty well. I can spend a little bit more time doing educational type stuff. That's both, practical but educational at the same time. As always, tell a friend, tell two. I'm LA, and I thank you for being there. Have a great night. Take care of yourself. Until next time, I'll see you then.